more pricing power, but I think is to scale up alongside that, and some won't and some will.
And agents only accelerate that.
Right, that's a great point.
Right, like they're going to go find the cheapest, lowest cost, most efficient way to do things. So that's going to be one of those forcing functions.
And less likely to be a captured customer because they don't care about the inertia of opening a new account, the same way that you would conventionally think of some of the frictions of just human time and effort allowing people to be captured.
And they don't like our beautiful branding. Yeah. And they don't give a shit about, you know, all the work that we put into those things. They want, you know, they're going to optimize for whatever they've been told to optimize for, which is generally going to be cost and security.
Yeah. Few teams that have, it feels as if they found the efficient frontier. There's this three-headed dragon that seems to be brewing, which is this Hyperliquid Zcash near three-headed dragon. I'm just curious if you guys have a perspective on why we may have seen this cohort of assets really take charge of the market in the last, say, call it a month or so.
I mean, best description I heard of Hyperliquid was, it was like you took a bunch of engineers and you put them in a room and you told them to like rebuild financial markets. Ignore regulation, ignore like all the rules, all the things that Hunter and I are, you know, the older people in the room, like we grew up having to deal with these things, just forget all those things. And I think, you know, that's I love what's happening there. It will run into a regulatory wall. It will, you know, there's going to be some limitations on the adoption there, but it's exciting to see, you know, innovation approaching in that way. Near, for me, like Intense was the thing that brought me in. That was the capability. I love Ilya's vision on AI and agents, but Intense was really the thing. When I saw that, I said, that is something really special and different. And it's, you know, it's the chain abstraction, the ability to sign transactions on other chains. Like that's such a powerful capability to have, you know, to get rid of that boat anchor of crypto steals that I have and to be able to do everything just in near.com. And then, you know, Zcash is just that theme of privacy. And I wrote about this for the Near Foundation board back in December, just the lack of privacy being a constraining function on institutional adoption in our space. Anytime you're making a payment, not just investing, I'm not just worried about people front running me or watching what I'm doing. Anytime I'm making a payment, anytime I have value moving in and out of a wallet, it's discoverable. You know, you've traded with OTC desks. The first time you trade with them, it's one kind of transaction. The second time, well, they know all your wallets and they know all the transactions. They could see a whole lot more about what's going on. You know, so I think Zcash is a great example of the way in which, you know, privacy as a concept is so critical.
Do you guys know the midwit meme? It's a normal distribution curve, and there's like a Jedi and a frustrated person and a Neanderthal. Yeah. I think another thing that's no. I'm surrounded by two. Yeah. I'm like the frustrated, you know, overthinking it. But the thing that I would just add, I think what you said is correct. The other thing I'd just say is something that those three have in common is they have smart, capable ecosystems and teams around them, and there's no force more powerful than being on the right side of a structural trend, and each of them is in a lane where they're at the forefront of a wave that is forceful and cresting, and that's a very powerful force. So I think being in the right position to do something that the world thinks is useful is true of all three, and is important to the success of any asset or any network, and so I think that's also a theme for those.
Yeah, they all feel very fundamentally part of this agentic movement of liquidity on chain, liquidity, efficiency, privacy, and agency with all these agents. Guys, thanks so much for this panel. It's really, really fun. Not the first time, hopefully not the last, and we're going to keep things rolling here at Near Miami. Give it up for our panelists.
Thanks, Robbie.
Hunter and Matt. My lovely co-host at the Rollup is going to join here for the next one, and we're going to keep things rolling. Thanks, Matt.
That microphone's going to fall.
I got you. Next up, we've got my friend Benjamin from the Starknet Foundation. We've got Nigel from Bridge, Kendall from Proximity, and Richard from MoonPay. So guys, who pays when AI acts? I'm getting the signal that I'm the moderator for this one. Andy? I think that's the case. So I'm gonna stick with you guys a little longer. Thank you. I think we got room for everyone here. There you go. Good to see ya. All right. Who pays when AI acts? Payments today and the future of agent-driven transactions. Last panel, you guys heard a little bit about as that movement of liquidity ends up on-chain, both on-chain rails and agentic rails. Now it's like, all right, now that it's on-chain, what happens next? Why don't we do just like one sentence intros? We don't do super long-winded intros, but we got plenty of people on the panel here. Ben, start with you. We'll move down the line.
Hey guys, I'm Benjamin Strisky. I am on the Strategic Projects and Investments team at the Starknet Foundation.
I'm Kendall, founder of Proximity, and we basically do stablecoins for near intents.
I'm Nigel on the go-to-market team at Bridge. We do stablecoin orchestration, issuance, and stablecoin linked card issuance.
I'm Rich from MoonPay. I'm VP for payment partnerships and banking, so effectively look after everything which is on the fiat side of crypto. Yeah, I'm a bit more old-fashioned traditional banking guy than the crypto guys.
I think for at least a little while longer, we're going to have a fiat system. Fortunately or unfortunately, hopefully we can move all that on-chain at some point, and then we'll rethink what the on-ramp situation looks like. But for now, we're still moving between fiat. We're moving between on-chain transactions. Richard, why don't we start with you? How does the movement of money between off-chain and on-chain rails, can agents basically abstract that away? Because it feels like if you're in one environment, if you're off-chain, you've kind of got your set of services. If you're on-chain, you got another set of services. You can kind of work pretty efficiently in these different environments. But if you have an agentic layer, does all of that get subsumed and you can translate a little bit more easily between off-chain and on-chain?
So I don't necessarily think so, no, because whether we like it or not, we are still very much reliant on the banking sector, right? And the problem with the banking sector is that it's built on humans, right? So humans are the ones that effectively authorize a transaction, are liable for a transaction, and so on. Yeah, with agents to work on the processing of transactions on behalf of, you've got to build like a delegation layer right in there. So you have to set limits and you have to set authorizations and so on. So I don't necessarily think that an agent will just take everything away because we don't necessarily want them to, right? You still want to have some sort of level of control in there, but it's like how you then instigate that control in the agent. So it could take away 80% of it, I'd say.
Got it. And so, guys, how are we thinking about, and Ben, maybe from the privacy perspective, the Starknet perspective, how are you thinking about stablecoins and agents, as they move on chain, and we'll kind of flow between our on-chain, off-chain partners here with Kendall and Nigel.
Yeah, so I think if we really want to see a lot of stablecoin activity and payments activity on-chain, it's going to have to be private. You look at traditional finance, almost everything is regulated and compliant, but if you pay someone through Wells Fargo, no one sees your payment history. When you're receiving your salary, no one sees your salary. And so, almost every public blockchain today is public, obviously. We haven't really seen payments take off in the way that I think a lot of people would have assumed 5 years ago that in 2026, people would be receiving their salaries on-chain, people would be paying other people on-chain, and it happens, but not to the extent that we thought it would. And I think privacy will have to be the biggest unlock for that.
Got it. And how do we fit agents into this as well? As we bring tokenized assets on-chain, it feels like we've started with stable coins. We've now got treasuries. We're kind of moving down the risk curve. We're tokenizing all of these assets. When we end up with a place where we can effectively earn yield at, the drop of a hat, more stable coins are on-chain, both yield-bearing and non-yield-bearing. Where do you think agents, because it feels like we're actually building more and more products for agents. Where do you think agents are going to prioritize their cash? Maybe what are they holding when it comes to these payment currencies? If they're sending money between agents and agents, what do you think are the attributes that they're most looking for in stablecoins? Is it privacy or is it maybe something else?
I mean, access more than anything. And I think that's sort of the big problem. The the infrastructure is starting to really get there, right? I mean, Link did a pretty cool like launch last week that is the first practical way that I've seen to pay with agents for like services you actually want. That being said, like cards are, not the best route for like micropayments that probably are a useful way to pay for certain API calls. But then the problem we have right now is like there's not, MPP is really cool, X402 are really cool, and there are some services that are starting to offer their APIs, but it's early, right? And so I think as we see basically just more adoption of those rails and more businesses that recognize that they'll actually have a lot of growth if they have a good product offered to agents, and the friction is very low, both like on-ramps, actually holding the balance in your wallet, and then having services that you actually want to consume as an agent or as a user using agents. Like that's, all those things kind of have to come together. And it's moving very fast, so I mean, probably we're talking months, but those pieces are still not really there today.
I would also add that I think, the same way that AI has made producing reports more efficient, producing presentations more efficient, that these AI systems, when they're making payments, when they're using DeFi, when they're just operating on chain, they're going to want to do that in the most efficient way possible and really the most capital efficient way possible. So they're going to be designed to use the cheapest networks, to use the products with the lowest operating costs in order to make as much money as possible.
And I hate to use a swear word, right? But compliance, right, comes into it. You're talking about like agents on cards, right? That, and I agree, we're not anywhere near like how seamless and UX it needs to be, right? Because even if you, like we launched an agent card last week, right? But we still have to have that 3DS authentication layer built into it. So you can tell your agent to go and buy you something, right? And it can scour the market and it can find you the best possible price and so on. You still have to do a two-step authentication, right? When it finds it, because there's a card attached to the agent. So like, how do you get through that without every single financial institution blowing up overnight?
Nigel, I want to get you in here. I know your wheels are spinning.
Wheels are spinning. So I think a few things to your previous question, and I think one kind of interesting development in the market is there are more and more stable coins that are launching, and if I'm a user, there's probably three things that I care about. One, first and foremost, is this a safe asset? Is this actually worth $1? Two, what sort of upside do I have from holding this? Whether that's accessing yields through DeFi, or maybe you're using a bespoke stablecoin that some company has issued and you're kind of in their ecosystem in that regard. And then three is, what can I actually buy with this? And that step of, hey, if I'm holding USDT on a certain chain and this merchant or the agent that's receiving the payment wants to receive a different stable coin on a different chain, how does that conversion and interoperability happen? And ultimately, that needs to be abstracted away from the end user.
And at what cost, right, as well,
Exactly.
right? Because, I mean, when you're doing any type of transaction online, you have to be super visible when it comes to the cost, right? So the individual has to know how much is it costing me, right, to do that. So to your point about agent A talking to agent B, right? Agent A wants USDC, agent B wants PYUSD or something. Who is doing that conversion, right? How much is it costing? And that's where I think, again, horrible word, but compliance kicks in, right? Because you have to trace the transaction all the way back to the beginning, right? You have to be able to see who initiated that transaction. So agent to agent to agent to agent, if we get to that point, right, it masks like the transaction layer completely. And I think that's where like a lot of banks just get super scared, right? Because there is no accountability, right? Or, well, there is an accountability, but it's like really muddy, right, in terms of accountability.
So Richard said 2 swear words so far. So I want to challenge,
never coming back.
actually, and hear everyone else's opinions on this. Maybe agents don't care about compliance. Maybe banks care a lot about compliance, but maybe agents are so innovative, they don't care about branding, they don't care about compliance, they care, is this thing secure? Code is law? Do I see any smart contract vulnerabilities? No? All right, I'm gonna use that thing, whether it's compliant or not, Tornado Cash, Thor Chain, like these things are, they're great for North Korea. They're not particularly compliant. Are agents going to use these rails? Guys, I mean, I'm going out on a limb here. I'm curious, what do you guys see this on one way or the other? How much do agents really care about compliance?
I can start, and I'm gonna take out my suit here and agree with Richard that compliance definitely matters. I think ultimately it doesn't really matter what the agent hereby cares. It's who controls the agent. And if we want, mass agent adoption, the reality is that in the United States there is regulation, as there should be. And if we want major payment systems to be interoperable with agents, so if we want JP Morgan, Chase to actually be willing to, use these systems, then they're going to have to just be compliant.
Yeah.
Crypto has a long history of unbanking people. And we don't want the same thing to happen to AI agent users, and so they're just going to have to be compliant with the law.
And just to add on to that, I think, hate to say it, but it's a relatively easy fix, right, as well, because agents are programmable, right? So you program the permissions into the agent, right? And the permissions you program into the agent is Korea safe to transact in, right? Because the agent is always going to go out and do what's right for you, right? Because that's ultimately what it's programmed to do. But you can program limits, like screenings, like you can program use this asset over that asset, like, and so on. You can program the agent. So as long as we get the programmability into the agent, right, then it shouldn't be a problem.
I'm also really interested to see how the relationship between kind of the KYC and the identity of the owner of the agent and the kind of risk and reputation and trust basis of that agent that's out, conducting commerce in the wild, how those two will be related over time. Because if you are going to have a human that's associated with an agent, then you can kind of get some of that reputation and compliance coverage that way. But you could also imagine a scenario where, someone buys a fraudster buys your KYC information off the dark web, KYCs, links that identity to an agent, and then prompts that agent go out and scam as many people as you can. So I think it's like a new kind of like vector of risk that we're all going to have to figure out how to navigate together.
Yeah, that's a good point. I guess it's like you can already you can already buy KYC on the dark web, but the things you can do are like maybe less damaging than they are when you like have an agent that can go out and operate autonomously. Yeah, I mean, I think there's even, there's the compliance aspect, but I think businesses also do want to know, not even purely for compliance reasons, they want to know who they're interacting with, because that helps them make their product better, and it helps them, retarget, and retargeting agents will be a thing, right? You'll have an agent use you, and you'll be like, we want them to keep coming back and using us, and I don't know what that's gonna look like. People are gonna figure that out. So I think there's gonna be at least some form of agent identity, for compliance reasons, for financial transactions, but also just for business reasons. People are going to try to enforce some type of account and agent identity just for their own product development.
When it comes to adoption, I'm curious what has worked so well in terms of getting stablecoin adoption, getting user adoption, and I'm curious because I'd imagine most of the businesses and you guys have geared that towards humans. And I'm just curious if that carries over to agents. So when you're, looking at adoption, what has worked so far, and do you think that will carry over to agents? MoonPay's got quite a bit of users here. Maybe we'll just go down the line.
Yeah, I think. So what are we doing so far that works, right? I think trying to make things headless, right? I think would be massively beneficial to this space. I think honestly, we are literally tip of the iceberg, right, when it comes to agents. So I think we are figuring stuff out as we go.
When you say headless, you mean maybe you can just describe that.
Just so MoonPay agnostic, right? So MoonPay doesn't appear in any environment. So completely headless for the individual. Okay. And it's something that we're doing across our business as a whole as well. So yeah, when you plug MoonPay in for other on-ramps, we're making it a headless experience as well. So it's unbranded.
They don't know that they're using MoonPay.
Correct. Yeah. But I think also, like we touched upon before, which is just setting limits, right? Spending limits, asset limits, velocity limits, right, as well. So your agent can't just go off and just spend 1,000 things, right, in the space of 5 minutes, because it can do that, right? A human can't, right, physically do that, right? Agents can. So I think we're just figuring that out as we go, setting in these sort of parameters. And that's why I was saying agents being programmable helps. But yeah, we're just figuring it out as we go.
Yeah, I think specifically as it pertains to agentic stablecoin payments, probably the thing that's working the best so far is the narrative and the hype, like all things, and that's a cheeky answer, but thinking about the stablecoin payment use cases that now are becoming more and more ubiquitous, cross-border payments, dollar access, et cetera. A few years ago, they were powered by kind of narrative and hype as well. And ultimately what it comes down to is, especially for any business that's coming more from like a Web 2 direction, ultimately the product experiences that they unlock for customers and for their businesses need to have enough value that they can get over that hump of getting comfortable with some of the uncertainty and some of the risks of leaning into a part of the industry where we're kind of building the plane while flying.
Yeah, I agree with all that. Yeah, I mean, I think like so it's kind of counter to the idea of agent authentication, although I think that'll start to get better. But like to your point, Richard, I think that the low friction experience is going to be like the products that see the most agent adoption. I mean, first and foremost, they're going to have to work. But second, it's going to be about low friction, right? Like a common thing if you're using agents today, whether it's coding or for anything, is you run into some blocker. And that blocker is usually some type of like, you need to sign up for an account and there's not an agent-friendly way to do that. And I expect that, I mean, one of the nice things about on-chain is once you get over that hurdle of getting on-chain, which fortunately is getting much easier thanks to people like MoonPay and Bridge, then everything's actually extremely low friction. And so I think I'm very optimistic that the friction of getting on and off chain will go as close to zero as possible. There'll always be some, but as close to zero as possible. And then agents will want to use those products because they'll be the lowest friction option in a lot of cases.
One interesting point you made there, just to add on to it, is like you mentioned that case where you're talking to a chat bot and then ultimately it needs to sign up for something and it can't, and that blocks you. The other piece of this is going to be the existing infrastructure and how businesses actually like cater to agents and design their sign up and onboarding flows to fit into some of those constraints that they have.
Yeah, so to finish this off, from our perspective, StarkNet's perspective, it's about creating the best system possible for the AI agents. And so there's a few different parameters there that matter. The first, obviously, is throughput. AI agents are going to need block space. On StarkNet, that's no longer really a blocker. We can support as much as we need to, given the current demand today. Right. The second, I think, is going to be network level configurations. And so everyone has probably seen the jokes about OpenClaw, spending my entire balance on some random nonsense, right? And so that actually can be a real issue. And if you give an AI agent a stablecoin balance, I would think it's actually not your money anymore. You have a very high probability of receiving it back, but it's actually secured by the code, obviously, of the agent. And so it's the code's money. And so, StarkNet supports native account abstraction, which enables you to set spending limits, other logic that, sends a little bit more of the control of your funds back to yourself. The third, from our perspective, is privacy, and I've touched on this a little bit already, but AI agents are going to replicate what works in traditional finance today for payments. And the reality is that payments need to be private, not public. And so with our privacy launch next month, you'll be able to have privacy for any asset, which means privacy transfers for stablecoins, which then means private payments for AI agents. And the last one, and I think this is a lot farther out, is decentralization. And while that might not matter too much today, later stage AI agents aren't going to necessarily want to operate on a network where someone can rug pull them. And so I think from our perspective, a path towards being a decentralized network makes us very attractive for AI agents.
Sticking with this notion of privacy, because I was kind of talking about this three-headed dragon on the last panel, and Zcash falls into that, and I think there are elements of Near's AI agent stack with OpenClaw, IronClaw that also takes into account this privacy. Hyperliquid, not so much, but maybe we'll see down the road. You guys deal with a lot of businesses. I know StarkNet's perspective, privacy is important. Nigel, maybe from the bridge perspective, and MoonPay and proximity as well. From the B2B side, how much do businesses prioritize privacy when it comes to integrating stablecoin payments?
Yeah, I think it evolves kind of as they get deeper down the rabbit hole. First they'll look at stablecoins and see like what benefit can this integrate, integrating stablecoins, what benefits can it bring to my business? And then at a certain point when they're going through and, let's say you're setting up, a use case where an employee is getting their salary streamed to them. That's tied to a wallet that has a stablecoin linked card. They go and do all of their everyday spend. At a certain point, that company realizes, hopefully before the end user, like, okay, you can see how much money this person is making and everything that they're spending it on. And that's obviously a big problem. So I agree, like privacy is over time going to become table stakes. And it's also important as we're thinking about like different privacy protocols, how does that fit in and become, not mutually exclusive with compliance. So it's a matter of making sure like the entities that need that information for regulatory purposes can get it. But it's kind of on a need-to-know basis where not everything is just out on chain.
But that's where like tokenization comes into play, right? Because you can share data, right? KYC tokenization, privacy tokenization. Yeah, and I think building out that functionality like would make things sort of super frictionless as well. So yeah.
Can I anything?
Yeah. No, I mean, I think that's exactly right. Like that, it very much step one is like that they get some other benefit from using stablecoins, and then they realize. I mean, so I think an interesting additional use is like when businesses are doing a lot of their payments, primarily cross-border, right? Like that's where the demand is right now, and they realize like, oh, this is super public, so like everyone could see all these cross-border payments that I'm putting out there. That's not how they want to operate their business, right? So like, yeah, very much like it's a second order demand, but now that a lot of businesses have gotten over that first hurdle demand, it has become extremely important. And so we have seen a lot more and more demand.
And does that happen at the chain level, or I kind of mentioned this on the previous panel as well, this asset-centric view of the world? Can you integrate that directly into the stablecoins themselves? I'm seeing more of that with like RWAs. You have KYC baked in a little bit, compliance being the key word there. But yeah, when it comes to some of these privacy elements, do you see that integrating at the asset level, the stablecoin level, or more so the chain level?
I mean, I'm extremely biased here, but I'll plug Near just here I mean, I think the challenge is that currently there's actually assets across many different chains that are doing very well, which is a great state of the world depending on your view. The challenge then is like, it's actually kind of difficult. If a business has to operate across multiple chains, then if you have single chain privacy, that starts to become really difficult. So the way we've done it, because our whole view of the world is like, we just care that you're using near intents, which actually connects a bunch of chains together. We're able to implement privacy at the near intents level, so you can move between these assets on different chains while staying within the private environment and keep that whole interaction private.
So everything on near intents is private.
Everything on near intents is private. Right now you have to opt into it, but okay. Eventually that'll be default. You can opt out, of course. There are some, actually for regulatory reasons, there are some institutions in particular that don't want privacy, but the average business seems to want it. Yeah.
Few minutes left here. Maybe just zooming out a little bit. I'm curious to get your long view here on everyone's long view here. There's been a few smart people that have said AI is the saving grace of crypto. Bless you. I'm just curious if you guys see this world too. Like we obviously had. We've had a lot of problems here with crypto. It feels like now we have AI agents. Are they going to become the primary users of these tokens? I see Nigel's wheels spinning. I can tell you've got something cooking.
I think it's a more like logical form factor for machines to use stable coins. And I guess to Ben's point earlier, where like a lot of the activity and kind of the rules of the road are dictated in code, it just seems to make a lot more sense. The reason why I'm like hesitant a little bit is I also don't think we should be viewing as an industry AI as it's gonna like swoop in and only the machines are gonna use crypto. Like this should not be mutually exclusive from us onboarding the next billion people on chain as well. So my answer would be both.
I completely agree with that. And so I don't think AI is going to be crypto's saving grace. I think that a lot of smart people in crypto have been preaching for a long time that crypto is a more capital efficient system. And if you're a rational actor, you should be using it over the traditional financial rails. And AI, by all means, should be rational. And so if AI agents are choosing to use crypto because it is a better system, then that's validating what people have said previously, and then it should usher in the next wave of true adoption.
I mean, just to build on that, I think it marries together really well, right? So digital assets, AI, agentic, like it's all programmable. You can put limitations in place and so on. I still think there's a question mark, right, over, and I think you touched upon it earlier about like liability, because again, going back to the old-fashioned way of paying, right? You make the payment, you are liable. If an agent steps outside of its parameters and buys something which you necessarily haven't agreed with, or is in a market that it can't operate and so on, who's liable, right? And I see that there's going to be a whole other world of legal cases, right? Where people will be like, I didn't do it, my agent did it, right? And it's just like, okay, well, you're the human behind your agent, you told it what to do, and somebody will be like, prove it, right? So I think there's like a whole argument around, it wasn't me, Your Honor, right? It was like the agent did it, and I just foresee like that happening at some point. And we'll stamp that out, right, pretty quickly, I think. But I think that's going to be a bit of a headache in the future.
And then it's a question of if it's human lawyers or AI lawyers.
Exactly. Yeah. Then you're paying an agent to represent you in court. And it's like, what the hell? Like,
Well said. These are. Oh yeah, Kendall.
Yeah, I mean, not much to add other than like agents are definitely eating everything. They'll eat crypto too. Crypto would have been fine without agents. I don't think it's a saving grace. It would have been fine, but agents are eating everything. Thus, like, eventually the average user of crypto will for sure be an agent, and maybe pretty quickly.
We got a minute left. Any questions from the audience? You guys curious about anything that we haven't covered so far? All right. If not, I've got a question for you guys. Who is currently getting paid in stablecoins? Like from their business, not receiving fiat, but you're receiving stablecoins. I see one hand. Guys, that's an issue, isn't it?
What
It's
are
like,
more
doing?
from like, yeah, I mean, we're at a crypto event. Like, there's tons of stable coins. What it feels, and I think almost everyone on the panel mentioned, payroll as like the catalyst for stablecoin payments. We've obviously got a lot of work to do. It feels very early. I mean, who's doing this? It feels very important. How do we get this off of one, right? We're not at zero. We got one. The guy in the orange shirt, shout out to that guy.
So we work with Deal, right? So we powered Deal, right? So the employment record business, and they are paying their contractors in stablecoin. Like the problem is, and I said this on a panel earlier, right? We are not there with the infrastructure yet. So you can get paid in stablecoin, but like, can you pay your rent in stablecoin? Can you pay your mortgage in stablecoin? Like, unless you have a stablecoin backed card, which you can then like work, and it can be a little bit expensive. Like the infrastructure is just not there to off-ramp that stablecoin one-to-one. You can get paid in it, but then what do you do with it, right? So I think once we build that infrastructure, it'll be easier, and everybody will get paid in stablecoin.
Yeah, I mean, we built out all these on-chain tools, and it feels like we've actually built maybe like too far ahead, right? But we haven't thought like, we've got to get these stablecoins into the people's hands, from the onset.
I think there are a lot of people, like we pay contractors in stablecoins, and there are.
So you didn't raise your hand, Kendall.
Well, I don't get paid in stablecoins. Because they're non-US, right? And like that's the reason, right? It's like, and I mean, we're not a US company, but it's like it's easy for international payments, right? So yeah, I mean, I think there are a lot of people in crypto, particularly if a company is operating like they have contractors all over the globe, which is very common. Then there are a lot of crypto companies paying people in stablecoins. But I think the point is like, crypto people are willing to get paid in stablecoins because they know how to off-ramp. Like they have exchange accounts. Like for them, they're fine with the friction. Whereas like the average person who's working at a normal company that doesn't have anything to do with crypto, for them the friction, that is a problem. Like if a company says, hey, we're going to pay you in stablecoins, they're like, what? That's horrible. Like why are you going to do that to me? And that's the missing piece. Like,
Yeah. And then there's this whole rabbit hole of tokenized deposits, which maybe could help on that front, but we won't get into that today. Guys, give it up for our panelists. Thank you so much. That was a fun one. We're going to keep things rolling here. Pleasure, guys. That was fun. Yeah, I'm glad. I feel like I haven't laughed that much on a panel in a while. Good to see you, man. Yeah, thanks for being here. Yeah, good to see you again, Kendall. Ben, go get some lunch or something. This one? Yeah. This one? Yeah. All right. What's up, George? Good to see you again. Yeah. All right. Andy's taking over. We got the stream figured out. Yeah, we're good. Beautiful. Enjoy, guys.
Alrighty, guys. Welcome to the AI financial pilot panel. The first real agentic applications. George Zhang of Near AI, Nishkam of Abound. Quick introductions, guys. Welcome to the panel.
Good to be here. I'm George, Chief Product Officer for Near and also GM for Near AI.
Hey, I'm Nishkam. It's great to be here too. I'm the founder CEO for Abound. We're a money remittance app for Indian expats in the US to send, spend, save, invest, and borrow seamlessly across borders.
Awesome, and I know that there's some news to cover today and some partnership. We also have a cool a demo video for you all. Let's get into just kind of laying the groundwork for the first real agentic applications. Kind of what can we expect in this application landscape as it's evolved so far? Looking ahead, what are some of these exemplary first real applications?
Sure, yeah, and I'll just speak to that, and I'll probably give you guys a little bit of a background for Abound just to put into context. So, we do money remittances for Indian expats from the US to India, and just for some context, Indian expats are like a virtual G20 economy unto themselves. There's close to like 33 million Indian expats around the world. It's an audience which is the population of Australia. They collectively earn $2.5 trillion. As an economy, they collectively remit about $120 billion into India every year. So it is by far the largest movement of consumer payments just around the world. And as Abound, we actually want to make it easy for money remittances into India. We ultimately believe that every dollar that's being sent home is being used for something. It's being used for family maintenance, it's being used for education, and so far, all the existing incumbents within the ecosystem, effectively, they're trying to cater to every demographic, which they can, whether it's Indians and Hispanics and Asians, what have you. And in doing that, they've lost the ability to go really deep and super serve those users. So as somebody who's an Indian expat, myself in the US, I should be able to invest in a mutual fund in India with one click, but it's really hard for me to do so. And oftentimes, the friction within that experience sits in the last mile. And so for me as an expat, when I send money to India, I have to stay up at 12 midnight and speak to like a banker in India when I have to do anything, whether it is moving money to a mutual fund or it is to do any other financial activity or even beyond. And so for us, agents solve a very real problem. And instead of me staying up till midnight, can my agent handle that for me? And so what you'll see in the demo is just one snippet, and it's our jumping off point for now doing agents. So if you want to play it, then I can just give a voiceover as we go along. So what you'll see on screen, and I'll just step aside for a sec, is this is the homepage of Abound. And if you want to keep playing, and so within the homepage of Abound, what we're letting the user do now is access their agent, and this is going to go live in beta as of this month. And we honestly think this should be the largest consumer application for an iron claw out there, about 500,000 iron claws, which should go live between now and the rest of the year. And what you're seeing over here is just some real world applications of what you can do with an agent. It'll help you maximize the exchange rate, which is really impactful for our users. It'll let you manage a few use cases, and there's an actual video like we recorded this morning. You say hi, and then as you go in, the agent will tell you what you're looking to do. You'll say that you're trying to send money to India, and we'll say like I want to send a certain amount back home. And once you do that, what's happening behind the scenes, and this is an actual demo with actual IronClaw behind the scenes, is that it's processing that request, and then it'll ask you a bunch of questions. Who do you want to send it to? Who's the recipient? We also take some consent from the user as we do it. So in this case, I want to send it to Prashant, who has engineering for us. And once the user selects his name, or even to me, although I feel like I'm not as handsome as the image on screen, but once you click on that name, it'll start to process all the information. And this is the piece which happens behind the scenes, but is really critical. Anytime you send money to somebody in India, you have their KYC, you have their passport, you have like their bank account on file. And this is where the magic of IronClaw really happens, is that you're taking really rich PII, right? There's your passport, your driver's license, your social security number. And this is being cryptographically sharded. So the LLM, or the language model, will never ever see the actual private keys, and it'll be cryptographically sharded out there. And then as you do that, you're seeing really rich PII get processed. You're asking the user for what is this going to be used for. That's mandated from a compliance standpoint. And in this case, it'll be used for family maintenance, for example. So we'll click on that. And here's the other interesting thing, is it'll show you an exchange rate predicting mechanism that's being run off of an agent. Now, typical behavior is that a user will end up opening 6 different apps every day. They'll say, what's the best exchange rate on service A, service B, service C, and oftentimes this happens near the day of a paycheck. So from the 10th of the month till the 16th, 17th of the month, the user will be opening 6 different apps practically every day just to check the exchange rate. And we take that friction out of the whole thing. We'll say, based on the exchange rate trend, and this is live as of today, it's telling you that this is the best exchange that you could possibly get. And once you take that, then we take consent from the user, and after that, the remittance is triggered. So we could probably stop the demo now, but this is effectively what's going to go live this month. And I feel like, as mundane as this might look like, which is send money to India at a high exchange rate, there's a lot of magical things that are happening behind the scenes, right? Like, you're taking their KYC, their passport, their driver's license, you're saving the friction of a user having to open multiple apps every single day for like a few consecutive days. And all of that is being abstracted away with an agent from IronClaw that we're super excited to work with.
I just want to add a few things to that, to what Nishkam said. So I didn't realize this, but Nishkam's old workflow used to be to do these set of actions manually at midnight, right? And at Near AI, we think that there's maybe 3 main components, 3 legs of the stool of having real transactions happen using AI agents. One is secure AI. So what you saw with IronClaw, and we'll have some exciting announcements soon with real security benchmarks showing that IronClaw is the most secure agent framework out there. Second is private AI. So being able to use confidential inference happening within trusted execution environments. So OpenAI, Anthropic, nor any other companies can see actually your financial data through their agents. It's actually in a completely encrypted, secure enclave where no one, including Near, is able to see the information going in and out. And third, really good transaction data. So you saw how this ends up being a transaction happening over Rails going to India. This is also part of our long-term vision of using Near Intents to be able to have the transaction layer for AI, real AI economic value. We think if you have those 3, secure AI, private AI, and then transaction layer, you can create some magical experiences.
Excellent. Thank you.
So, kind of expand upon what kind of product breakthroughs or kind of UX improvements materially in this specific example are derived from this experience. You talked about how it's quite a tedious endeavor to do a remittance from India for expats. Is this streamlining? Like, are we saving days, hours? Like, what is the kind of convenience and the kind of breakthrough here of efficiency? Like, what's the scale that we're talking?
Yeah, I mean, look, I'll say this. I think the India corridor is the largest money remittance corridor on the planet. Yeah. It is the largest cross-border payments corridor on the planet, and it is by far larger, than a whole bunch of others. Unfortunately, India is literally half a world away, quite literally. So you're always staying up at stupid hours, just to do basic things. And here, what you saw on screen is just a precursor of what we think this can be. For now, what this is saving is just, the friction of having to open multiple apps every single day just to look at exchange rates. I think what this also takes away is the emotional anxiety which you have, right? Because oftentimes the money that you're sending back home is being used to support family out the other end. And getting like a marginally better exchange rate might seem mundane, but for somebody receiving the money, it is meaningful as a difference. So I think you're taking away that stress, but more importantly, what you're also now doing is bringing peace of mind and starting to put almost like an autopilot behind what you're trying to do, right? And ultimately, where we see the most friction is on that last mile in India, right? Where once the money gets to a bank account in India, what do you do then, right? And the idea that you're having to stay up at midnight, talk to a banker, talk to somebody else, all of that gets abstracted away, and it's an agent. And for us, building trust around it means that you open up a lot of other use cases, right? Which is, go pay electricity bills or go pay this, go do that. And it really is a godsend. I'll share my own personal example of what I did, in the last 1 month. I had to file my taxes in the US. I had to go get like my bank balances in India. And typically that would have meant staying up again at midnight, talking to a banker saying, hey, I cannot log into the website because I generally cannot. And then having him email me a statement at the end of the month. That would have been about a day of coordination back and forth over email, and then I get my bank statement, and then finally I get a bank balance I could go put on my tax return here. And what I actually did is that I went to like my OpenClaw, IronClaw, and then asked like, what was my bank statement in India? You've got access to my email. It instantly pulled up my bank balance. It just asked me for an OTP credential to like log in. And once I did that, within, I would say less than a minute, it gave me a bank balance, like my bank balance at the end of the year. And again, it sounds super mundane, but it's really hard to do. And so I feel like that's essentially where we see this going, is that anything cross-border, we can automate away with an agent. Our vision is to eventually add an eSIM with every instance of an IronClaw. And so then it can do tasks for you remotely. It can call, it can like receive these OTPs, the things that I had to do manually. It can even abstract that away.
Yeah, George, one of the things that I was talking about earlier as it pertains to this was this kind of prescriptive improvement of the way that some of these models are reacting. Specifically, that was the breakthrough with OpenClaw. IronClaw was this kind of more prescriptive, much less prompting required, and much more of like a action-oriented from a like stimulating action from its own kind of intelligence rather than purely having to give that prompt or command. When it comes to highly sensitive information like finances, to what scale do you think the privacy features of IronClaw really make it the most compelling option for sensitive use cases? How do you think about this prescriptive prompting with sensitive use cases? You want all the benefits of these highly sophisticated models and technologies with very sensitive data. How do you balance that?
Yeah, that's a great question. The one way to think about this is the LLM models are the brains, and then the agent frameworks or harnesses are the bodies, right? The LLM can think, but the agent harness, the agent framework has to move, has to act. And those two need to actually be built securely and privately in different ways. So the way we've approached it is IronClaw ends up being very secure as an agent framework because it does things like it secures your passwords. It doesn't sort of reveal that to LLMs. It's built in Rust versus TypeScript. It has sandboxes for different processes and a overall Docker sandbox for more advanced processes. And it uses things like prompt injection protection at the architectural levels. There's a lot of like security things that have been implemented to make it a lot safer. And you'll see this in security sort of benchmarks in the future. Then there's the privacy piece you mentioned. But the privacy piece ends up being different from the security piece. So the way that we handle privacy is we do confidential inference within trusted execution environments. That's just like a complicated way of saying we're able to run open source AI models in secure enclaves where no one can see the questions that are asked and the responses that are returned, including here, right? So now you have an agent framework that's much more difficult to compromise from a security perspective. You have a brain that is able to think privately and doesn't leak your information to OpenAI or Anthropic or any other centralized AI company. We think both are critical because if you're doing financial transactions, obviously you don't want a security compromise. And if you're using private keys or credit card information or anything that's sensitive, you don't want to leak that information to another company.
And when it comes to actually the sophistication of the model and the quality and the intelligence, are you still able to maintain all of those properties as the intelligence scales? For a use case like this, these users are going to want to be, consistently feeling like their financial agent is getting better with them, helping them earn more money, helping them save more money, helping them be, as you evolve in the feature set, right? You kind of build this relationship. They want to know that this thing's getting smarter and smarter. Are you able to still give them that property while maintaining the privacy and security, as you mentioned?
Absolutely. What you see here now are open source models getting better and better. And kind of what I think will happen over time is the delta between closed and open source model will shrink more and more. You can't prevent smart people from working on other projects, right? So what you naturally see happening in tech is a diffusion, a transference of like knowledge and expertise amongst many different companies, right? Like GOM, Quinn, Kimi, like all of these are great models. And I think what you will also see is that these open source models are ones that we can run within these secure enclaves. Near AI is also able to anonymize models through like a mixer model for if you really want to use an Anthropic model or an OpenAI model, that's still possible in an anonymized way as well. Right? It's not completely private, but it's much more private than giving them all your information.
When it comes to some of the remittance side and payment side, is there a future that you see of this app specifically becoming a lot more integrated with stablecoins, using near intents, using this kind of agent intents framework that George laid out in his initial response to the demo? How do you think about that kind of speed of adoption?
No, totally agreed. And so I'll say this. We think the future of remittances is on-chain. It's with agents, and we think the future of agents is also on-chain for all the reasons that George mentioned, that it can be more secure, it can be more private, and ultimately you want money to move at the speed of the internet, which it just doesn't right now. And so we're very bullish about where the whole sector is going.
And so you think that there could be a very seamless integration kind of under the hood, operating for like a INR stablecoin or USD stablecoin?
So that's the hope, right? I think there's still like a lot of work that has to happen from like a compliance standpoint. Obviously, we want to be on the right side of that. But we do think that this is absolutely where the ecosystem is headed, and like we'd love to be first with Near as we do that.
As you guys are both thinking about kind of scaling the abilities of agents, in the financial first framework, what are some of the other applications and use cases that you guys find most compelling from a actual demand perspective, like actual solving a problem, not just kind of creating ideas, but where is the real demand on the finance side for agents?
Oh, this is why don't we both tackle this? Because I think we have very different perspectives on this. This is actually a question I've talked to a lot of both crypto and non-crypto companies on, right? On the crypto side, we see people interested in doing things like optimizing for yield, helping to manage their crypto portfolios. We see people interested in using agents for doing things like crypto-specific security, research on different crypto protocols. Those are a lot of like vertical-specific, crypto-specific use cases, and then all of the usual horizontal, functional-specific use cases. I want to enhance my engineering team with agents capable of doing smart contract engineering. I want to be able to have agents helping to enhance my operations or my marketing or sales as well.
Yeah, and for us, I'll say this: our mental model is that every dollar being sent back home is being used for something. And oftentimes, the existing ecosystem looks at it almost as like a single-player problem. There's a sender in the US who's sending money back home to India, and then there's a whole other person out the other end who's actually going to be the beneficiary of it, but they currently have no participation within that ecosystem. At the same time, you've got the sender here in the US who also has got very little agency of what happens once those funds do reach India, right? And again, there's a lot of friction within that whole ecosystem. So with that mental model in mind, we think that using agents, you can make the last mile significantly more seamless. You can bring in the recipient within that. So an example of that is if my brother, hypothetically, in India wants to go buy a laptop, I can either send him $1,000, over a money remittance done in the traditional sense, and then he has to receive that, which has a whole bunch of friction as well. He'll have to negotiate with his Indian bank for receiving those dollars. What exchange rate is he getting? And then ultimately, he will then take those proceeds, go put it on a card or just use his debit card and go to a local store and then purchase. And how wonderful would it be if I could just send him a WhatsApp with a link to an Abound wallet where he can go to the local store and spend on demand with funds that are already in the US? And how wonderful would it be if within that whole interaction, I could just say, my brother needs a laptop this month, right? And like the agent is now looking for the best deal, just now working with my brother, for that, right? And so when you start to look at the world as, how can this remittance experience be somewhat invisible and really enable the recipient to do the things that they really want to do and really make it easy for the sender to do that and make that happen, that's incredibly powerful. And I feel like that's ultimately where we see Signal with AI and agents in general.
I think we're about out of time, guys. Let's give it up for your panelists, George and Mikshan. Thank you, guys. Alrighty, we've got our next panel. Who secures the assets? Custody, risk, and confidential execution. Keon, Ravinshid, Nathan Stump, Zach Pandel, Tony, Margaret, and of course, myself. We will get you. Okay. We have Alex. I apologize. Oh, sorry, buddy. Thanks. All right, Alex. Boy, do I have some questions. All right. Intense today. Progress Partners and the road ahead. Alex Shevchenko. That is our next panel, the one that I just mentioned. Alex, welcome to Miami. How's Miami treating you?
So the internet is really shit, mobile internet. I feel like I'm not in Miami, but in some kind of Miami grad. Yeah, but like it's, but besides that, the events are amazing. So many not very typical crypto people here, but lots of interest from institutions and bigger organizations, which is great.
Man, I mean, just to get right into it, we saw one of the largest DeFi exploits as of late due to a single node signer, one of one DVN is what these things are called, effectively like a single node exploit. When you're thinking about the landscape for interoperability from Intense, how important is it to just move away from centralized bridge designs and really be able to kind of scale into more efficient and more practical bridge designs?
Yeah, that's a great question. So fundamentally, even if you're working within a single blockchain, the people who are working with it are not just only decentralized applications. When you have centralized exchanges integrated with these, people who are doing like moves outside of the blockchain, and because of this, the security concerns are extremely, extremely important, right? You cannot just roll back the chain 3 hours like Litecoin did and expect that everything performed as it was expected. 17 sigma deviation, is nice. This is what happens with our chains. The same way how we would not expect that a one-day reorg of Bitcoin would be okay, right? Nobody is expecting this. So from that standpoint, cross-chain is extremely, extremely complicated. And security practices, they must be hardened everywhere, especially right now with the development of AI, and there are we observe lots of AI-assisted hacks. By the nature of what we're doing, we're exposed to all of these different signals from all of these different ecosystems, and we need to react accordingly. And because of these, our security practices on the topest possible level here. I have been running. I started the first bridge with the Near ecosystem, which is called the Rainbow Bridge. At some point in time, there were more than 2.5 billion of highly liquid assets on this bridge, not being hacked, and I would take a credit for it. but it evolved. It evolved into OmniBridge, and OmniBridge right now is managed by the Near One, and then the team is doing an absolutely amazing job on doing this stuff. So security, what I'm saying always, that security is a multi-layered cake, and then you always need to make sure that there are enough fences so that people are not going to go through the Swiss cheese only through the holes. Yeah, but everybody needs to be alerted. Everybody needs to expect the hack. It can happen. It can happen with the best of us. And the most important question is how you're going to react and what is your plan after this. Yeah, so very unfortunate situation with CalpDAO and Layer Zero.
Yeah, I was just curious. Yeah, I appreciate that. I think one of the things that you guys have done well is get tightly integrated with ecosystems that are difficult to access from EVM chains or from Solana. Even just Bitcoin is difficult to bridge in and out of for just traditional bridge designs. It's just tough. Near Intents and Near.com has kind of paved what is now one of the best, if not the best, cross-execution environment bridges, right? Like you can go from all different types of execution environments in a very seamless way. And specifically with Zcash, there's a big privacy orientation there, right? And I think that's something that a lot of people want to be a bit more in the loop on and understand a bit more of. So perhaps you could kind of give the Near Intents why it is so important to connect ecosystems like Zcash to Bitcoin to Ethereum, but then why is it so important to do that in a confidential manner and that these confidential intents is something that you're very, very focused on.
Yeah, so historically, we've built public blockchains as an idea to create a decentralized version of a money where there is no centralized authority that is controlling the flow. We did it with the tools that we had back that time, and it was working, but the way how the public blockchains are working right now is pretty bad. And to give you an example here, like if I'm gonna go and pay with my USDT on Tron which is in some places is accepted for my coffee, the problem that I'm gonna see is that the person on the other side of the counter would now suddenly know all of my transactions that have been happening through all of my time. And then in case a potential person who wants to attack me would understand that I was in this coffee shop at this point in time, and there is a pattern that I'm going to this coffee shop and I'm paying because they know what is the address of the coffee shop because maybe it's leaked somewhere in the internet, and all of the stuff. So then they can attack me. Traditional financial system doesn't have this flaw. When I'm using my Revolut card and paying for my coffee, nobody knows how much money I own. So privacy and all of the discussions around privacy with the blockchain is actually bringing back normality into the blockchain world, into the financial aspect of the blockchain world. And this is extremely, extremely important, and any meaningful adoption can happen only through the privacy. I'm super glad for Zcash to bring this narrative back into the market. They did an amazing job here, and I'm also happy that Near Intents now supports the confidential swaps, something that, again, everybody are expecting to have. When you're going to the currency exchange, nobody sees how much you specifically traded of US dollar into Canadian dollar, for example. And now we have this functionality, this one additional piece of infrastructure that allows you to also confidentially trade currencies. So.
Yeah, I feel like that's a big part of the next evolution of this product, right? Because I think what we've seen is the emergence of a lot of crypto assets on chain for the last 10-ish years, specifically in the last 5, right? And in the last 6 to 12 months, we've seen an absolute transition and major focus shift to non-crypto assets on chain, right? Think anything from a stable coin all the way to private credit and anything in the middle of that risk spectrum. With confidential intents, you provide a much more institutional appeal to moving assets across chains that are non-crypto assets. So I'm curious how, and I know you're very kind of like cypherpunk and very like ethos driven, how do you think about the rise of non-crypto assets on near intent rails and the need and who you're serving with confidential intent?
So the adoption of the confidential swapping at the moment, it just naturally starts. We are deliberately not doing any, crazy moves, throwing tons of money, millions into the marketing of anything. We believe that the users will always use the product that they want to use, and there is no point in inflating the kind of the things. But I'm happy to say that our users are willing to use confidential swaps, even though the current fees on the Near.com are higher, because they are willing to pay more for the confidentiality, and we are already at the point when more than half of the swaps that are happening on the Near.com are happening through the confidential rails.
Really?
Yes. So
As
people
of like this month or last couple of weeks or?
yeah, just last couple of weeks. So users prefer to stay confidential, which means that for me, this is an indication that this problem actually bothers users, right? We hear a lot from the institutional clients that they are tired of being tracked by Arkham and being able, just to put the address and then, oh yeah, this is associated with, who knows, maybe Bitwise. And then suddenly, like, there is no positions that are invisible. The whole market operates with sufficient amount of intelligence with which you can just buy. The whole market operates as a transparent, like completely transparent. This is unimaginable. Imagine a tab on your Bloomberg terminal where you can see all of the trades of all of the traders in the world, right? So that's strange. Yeah.
So then I think, like, do you think that there is a stronger desire than from the larger asset managers and allocators to use these rails for their kind of onboarding of this tokenization wave and to use confidential intent for that?
There are so many different use cases. There are many projects that are willing to move, for example, payments and payrolls onto the blockchain because it's just much more efficient, especially for the cross-border transfers. They want to have, to be able to have this private. There are funds who are willing to liquidate their positions, and now suddenly, if there is a project that they invested in, and they know what is the wallet of the fund, and then suddenly if the fund wants to liquidate the position, the next thing that you're getting as a fund manager is a call from the project like, why are you doing this? Why are you liquidating? Well, we are kind of doing the rebalancing of the portfolio, blah, 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 all of this stuff, yeah? Nobody wants this. So if you want to dump your tokens, dear funds, come to Near.com and you can do it, and nobody will see it. And there are many other very natural use cases. So I was obviously exaggerating and going to the extreme here, but there are very natural, very normal feel of your financial life not being exposed to the whole world.
100%. When it comes to some of the revenue that Near Intent has kind of accrued and generated as of late, has it surprised you?
It somewhat surprised me, but like approximately 1.5, 2 years ago, when I was first looking at the cross-chain market for the decentralized protocols, I was surprised that this market is, there are market participants, and Thorchain back then was like super big. But I was surprised that the algorithms and the approaches were extremely inefficient. It felt to me, in comparison with the traditional markets, that this is completely, open field, and people are amateurs. And my feeling was that, hey, we can make a next step of bringing better technology that is going to be more convenient for users, because we are experts in making great user experiences. But then we also can make it closer from the standpoint of the guts of the protocol, and make it at least at the level of the centralized exchanges. When there are market makers, when there are users, they are matched against each other through some kind of form of a matching engine or like order book, blah, blah, all of the stuff. And this will make the capital much more efficient and still preserve all of the great things. So Yeah, I was amazed that the market exists. It is extremely inefficient. So I'm happy that Near Intense was able to move forward and capture this attention. This is definitely not because of me. This is definitely because of all of the great people who are working in the team. So kudos to my team, so that I can sit here and tell them about how good they are.
Yeah, and on the revenue side, did you anticipate or were you worried, and is it still a concern that the fee switch was going to deter users who are looking for the best rates or best pricing?
I don't think so. So the fee switch is just, it was just pretty clear that the protocol needs to earn money, right? And then for those of you who don't know, in February what we did is we actually said that, hey, dear partners who are integrating with Near Intense, you're setting up your own fees that you're getting, so we would like to get a cut of these fees, right? That was as simple as that. This is a win-win partnership, completely symbiotical in between the parties. So this is a natural thing. I always, when I'm working with somebody, with an external person, I'm always asking myself a question, so why this person is interested in this partnership, where he does earn money. And if this person doesn't give me an answer to this, it means that there is something sketchy that is happening here. I don't want to feel sketchy. I don't want other people to feel sketchy about myself. So I'm able to very openly say, yes, we would like to work with you because the success of your business means the success of our business too. So let's work together. Let's grow together. We're not forcing you to have fixed payments to us, nothing like that. If you're big, then we are big. If you're small, then we are also small. We're working as partners forward.
And Alex, why are the fees higher on the private side than the public side?
This is a decision of the product team for the Near.com. So the protocol fees is like the protocol sells in two versions, right? There is a B2B partnerships. So for example, users on Ledger are swapping through Near Intense. So every time when you're executing the swap on Ledger, there is a chance that it is gonna be routed through the Near Intense. But then there is also our own front end, which is Near.com. There are product people there that are working there. We don't want to make it for free, and so users expect it to be free. It would be a misconception. And then there was just this idea to test out. What if there will be just additional 5 bips on top of this? Would people bother? Would it be? Are they willing to pay just a little bit more, but for the privacy? And what the market tells us is that yes, people care enough about privacy to pay for it. This is an absolutely great and important insight that we're getting from here.
Just last thing quickly, what do you think gets the Near Intense revenue to, several $100 million a year?
So the path here is not going to be simple. Everybody understands this. Our first, there are multiple directions that we are taking in order to get there. And they are mostly widening up the addressable market for Intense or widening up the set of products that we are proposing to our customers. So on the addressable market, we are moving towards the institutions. We have great partners who are actually performing quite a lot of volume, and we are making this technology much more accessible to them. This includes security, attestations, ability to do later settlement, margins, all of these different things. On the breadth of the products, we are definitely integrating more chains, more interesting tokens. This is like a very simple step. But then we are getting additional features like confidential intents, and then an ability to earn so that the assets are not just stored there, but they are productively used. They can be staked, they can be LP'd into DeFi, if anyone is brave enough to put money in DeFi right now. And some additional things, but this will pass, right? So do more things with the assets inside of Near.com. That's the breadth. We're walking both of these roads right now. There are different teams who are focused on these things, and this is the way how to grow it. Staying, and all of the companies who are just doing cross-chain swaps and not moving to the new markets or trying to serve this product to wider groups, they are not going to grow because this market is limited to 200 to 500 million per day. And at least our ambition is to become a much bigger venue, and this market is not enough for us. That's why we are actively expanding.
Ladies and gentlemen, give it up for Alex. Thank you, guys.
Thanks, everyone.
All right, the previously mentioned panel is now ready to be moderated by Robbie. We will have Keon, Nathan, Zach, and Tony. The chairs set up, guys. Let's give them a round of applause. Rob, what's going on?
Yo, Andy, my lovely co-host. We're gonna get some more chairs up here. Thank you, gentlemen. This guy gets it. This guy has fast throughput right here. We've got chairs per second at an all-time high. Mics should be on. One more chair, two more chairs. Oh, we got a quick reorg. Cool. Yeah, okay, I'll come on the end here. All right. Great last panel. Let's have some fun here, guys. It's a great week in Miami. What do you guys think, Miami, so far? I grew up. Yeah.
Hot, fucking hot.
Anything other than you got the suit on?
Well, I live here, and
Okay.
so I love it. It's awesome. Best city in America.
I would say, can you imagine the vibes if the market were up? I mean, it's been kind of an incredible week in terms of energy level and attendance and all that sort of stuff in a down market. I mean, I think it's been a great conference overall.
Yeah. Market was up a little bit yesterday. I saw NIR was up 16%. Zcash had a ripper. Okay, so we've got HODL, ZODL, BitGo, Grayscale. We're going to be talking about who secures the assets, custody risk, and confidential execution. Well, why don't we go down the list? I don't think I've had the pleasure of meet you guys. Aside from Zach was on our show a little while ago, and I want to use something that Zach said in that episode as kind of the pretense for custody. And I think Zach knows what I'm going to allude to because we were talking about the tokenization super cycle, and it really feels like, first we tokenize the assets, they come on chain, they go into all these DeFi primitives, and then all of a sudden you do get this massive repricing because this absolute storm of assets has now entered the arena. And so what was the biggest thing holding that up? Zach said institutional custody. So we'll go down the list, we'll get custody risk and confidential execution. But just starting with custody, Zach, maybe you could just expand upon this idea of what is currently holding up the tokenization super cycle and why you think it's institutional custody.
Yeah, a lot of kind of elements to that story, but just building on that previous conversation, how we think about it is the financial system. That's what we're rebuilding is the financial system that connects savers and investors, or people that have capital to lend and people that need capital to borrow. And so we can tokenize assets all day long. But if there's not a way to bring the capital deployers, the savers, the people that are investing these funds on chain effectively, there's no point to it. And so one of the things that holds back this wave in our view is just we're not quite there yet for the big boys of institutional finance to be doing self-custody, having their own wallets. The infrastructure is almost there, but certainly it's not deployed at scale. When you go into Morgan Stanley, you go into Wells Fargo, and you go into other partners, they're still very much at the ETF. They want that custody provided for them in the form of the ETF, and they want the wrapper to go in traditional brokerage accounts. When we get there, when we get to the point where we have institutional wallets and self-custody, we're going to be able to unlock the tokenization wave in a much bigger way, in our view.
Yeah. Okay, so setting the stage here, we've now got almost all of the pieces where we're ready for trillions or more in assets. It feels, and I mentioned this earlier, it feels like we've got this three-headed dragon, Zcash, NIR, and Hyperliquid. Using these as sort of the foray through which I think a lot of people are kind of looking at and entering the ecosystem. We've got a varying set of approaches. Zcash got, shielded, and we've got ZODL here, and Hyperliquid's got, their approach and deposits, self-custody and such. And then we've obviously got the more institutional front. When we're looking at, kind of the landscape here, how do we ultimately get these things all composable? I think that's where we really start to unlock what, the value proposition of this new financial system can really do. Maybe Tony, we'll start with you and we'll kind of come down the line. Privacy feels like it's in the room with us all the time, but we can't really see it. We don't quite know how to integrate it. If we can get to a point where, we leverage the privacy of Zcash in addition to these other assets, everything becomes composable together. Feels like that's a massive value that's unlocked. Maybe you could speak to how you guys have approached this at Zottle and how we can bring privacy to the rest of the ecosystem.
Yeah, that's a great question. So at Zottle, one of the things that we did to really, bring Zcash to other ecosystems was we integrated near intents. And obviously it's topical here, and Alex just had a good talk on it, but historically, Zcash has always had like really groundbreaking tech, zero-knowledge proofs. We implemented those back in 2016. But I think it was a little bit isolated in its own ecosystem. And so now with near intents, and one of the features I'll call out is cross-pay, because this plays into agentic commerce. But if a vendor or if my friend only wants to accept USDC or Bitcoin or ETH within Zottle, I'm able to store my wealth shielded in Zcash, and I can pay them exactly the amount in whatever currency they want, any currency that's supported by near intents. And that's a big deal. It's kind of like meeting people where they're at. If you look at agentic commerce or whatever, if I have an agent out there that I want to go make a purchase on Amazon or go book a flight and they don't accept shielded Zcash, well, that's fine. Through our partnership with near intents, we're able to those payments can be executed as well.
Can I just pile on one quick thing on Zottle, not to hog the mic here, but I love the outbound concept, of course, what Zottle and Zcash are doing, but I'd just like to pitch, think about it inbound as well. Everybody that has spent some time in crypto has some assets scattered all over different chains. You probably got some BNB chain stuff. You probably got some Avalanche stuff. When was the last time you looked at these assets? Zottle and Zcash can be a private hub for your on-chain wealth. Clean up your on-chain life and bring these with near intents into a shielded pool. And then, who knows what you might do with those assets in the future. But what a great place to sort of hold these. Zottle is mandatory self-custody. Default shielded assets. You can kind of sweep up your on-chain life into a shielded pool. To me, it's like a great use case of both of these tools: the wallet, the chain, and near intents.
Yeah.
All right. Sorry, I just love it. Had to get that pitch across.
Good pitch. So at HODL, actually, we have some unsolved challenges which we're waiting for some evolution to happen in the space. We do tokenized hedge fund strategies, which means that people can access them, on-chain as well, just directly on our website, the HODL protocol. But one of the issues is, because it's on-chain, perhaps somebody could see all of your holdings. You can also see the smart contracts that are executing trades, what they're executing. Now, obviously, reverse engineering that is difficult and might not be worth it, but there's a challenge there that as we get more consolidation in the market, there's less and less strategies, less funds that are providing those strategies, then it'll make more economic sense to try and copy or reverse engineer and front run them. So we're looking forward to actually seeing how we can work with Near as well. And eventually, if there's a standard that's developed, there's like some standardization in the space about how we expect privacy to work. Like in TradFi, there's different types of certifications and SOX compliance and other standards. If that comes to digital assets, and it'll be great. Yeah.
But ultimately, who hates privacy is regulators. So like when we think about the evolution of where we're at now, like if BitGo, right, we're an OCC chartered bank. We have 7 regulatory licenses globally, $100 billion in assets. 2 years ago, we couldn't get a bank account. So like when it came to, regulators or people coming to us and say, hey, we want to hold these assets, we want to deploy these sort of things. OCs, at the time, we were state chartered trust. regulator coming in saying, tell us about these transactions. Like we could, privacy was kind of a difficult thing. We didn't support a lot of the tokens because, you know, regulators hated it, and we were trying to run a business. And so now we're at a point where like privacy is becoming, you know, there's always the fund running and all these sort of things, but from a custodial perspective, it's really difficult because we don't want clients to, well, we don't want people to look at BitGo wallets and say we can understand and start tracing these. Like we're thinking about ways that we can shield, for lack of a better term, these sort of positions. But at the end of the day, you know, having even this conversation is a little bit more privileged than it was a year and a half ago.
So before we get too deep into this confidential execution realm, let's just come back to the custody conversation. You know, when it comes to the institutional custody, Zach, you mentioned, you know, this is kind of holding up some of this tokenization super cycle, especially having an on-prem solution for these things. I mean, Nathan, would you argue that, you know, we actually have it solved? BitGo is the solution for that?
No, because you can go on chain and see BitGo wallets. I mean, like we get wallets that are tagged. Like people can see transactions of some of our largest clients. If you're a large organization, let's say a VC shop that owns a sizable portion of an asset, if you put that into an environment, no matter how many wallets you split it up into, they can see the base and they can start tracking those sort of things. So it's really hard to actually, you know, we have, you know, clients who own sizable amounts, you know, the low float, high FTV sort of positions, and it's really hard to get away from tracking that. Now, in the world of publicly traded companies, like you can't just sell off a position and not tell anybody if you have a sizable position. So like, there's some things on privacy maybe being not the greatest solution because it is trying to shield from like what's going on in the market if you are a key decision maker or a position in that holdings. But like ultimately, for us, like we don't want all our wallets to be exposed, not because we're trying to hide things, but we are trying to create some level of confidentiality internally.
Zach, just to kind of come back here, like, you know, what do you currently see with BitGo that, you know, as just a custody example, right? There's lots of institutional custody providers, but we got BitGo, you know, Nathan's here on the panel here. So like,
shout out BitGo. Yeah.
Shout out BitGo.
Shout out.
What could we do? Like, how do we overcome this this current environment of custody and ultimately reach the catalyst of unlocking this next wave?
We're really getting there, and you know, really shout out to BitGo. You know, of course, a U.S. publicly traded company leading the industry in this kind of stuff, groundbreaking in many ways. And you know, Mike is an OG and somebody who I think is very thoughtful on all the complex issues around this topic. Look, I think for me, the answer is kind of a demand pull thing. You have to have a reason for institutional capital to get on chain in the first place. What is the asset that they want to go get? You know, Bitcoin was a kind of a start of that process. Can we make unique types of tokenized assets or unique tokens? You know, like say the tokenized Galaxy share example. You know, something that only exists on chain. I think that ecosystem will grow a lot, and it'll be a demand pull thing. Institutions will say, I got to get on chain because I have to get that asset. We're not quite there yet, but I think that is the thing that ultimately forces us forward.
And then obviously, you know, we've talked about privacy, confidentiality as it pertains to custody, as well as execution a bit, custody as well. The boogeyman here is the risk. Like, you know, we've seen far too many hacks over the last, you know, even call it weeks to months. It feels like it's increased, it's accelerated. We know that there was this massive Bybit hack a while ago. So by, you know, cumulative, you know, hacked assets, maybe it's not the biggest in terms of, you know, what we're on pace to this year, but the amount of protocols feels very, very vulnerable. How do we overcome this? It feels like if we stick to our roots and we're decentralized, maybe we can prevent a lot of this. But I'm just, you know, curious, how does it start at the custody layer, or is there something else that we can embed into this ecosystem, risk controls, asset controls that ultimately mitigates a lot of the risk that we're seeing right now?
I mean, in our case, I think we recognize that it's the biggest risk, and it might actually get worse because of what we saw with like drift and the social engineering aspect, because as more people actually get involved in DeFi and digital assets, but especially the DeFi side of things, then there's more potential targets. So you have and also the equation is control versus, you know, versus kind of, so if you have more control, maybe you can prevent a hack, but then you also have control, so you could be a perpetrator, like a bad actor, insider risk. So there's both of those things. But the insider risk could be mitigated if governments decide that, okay, just because you have control doesn't make something a security, because right now that's one of the big pillars of how you avoid having your protocol's token be considered a security is, can you control, or do you have discretion or authority over like trading, for example, that happens if it's a vault product in that vault. So protocols try to eliminate the control factor, but by doing so, if there is a hack, they essentially have no choice other than maybe to shut it down.
So I'd chime in and say that, privacy isn't about hiding anything. It's really about mitigating your exposure. And it's hard to hack what you can't see. At the end of the day, if you can't see balances, if you can't see transactions, your transaction graph is really your risk exposure. Every time you're making public transactions on chain, with AI, that becomes trivial to track patterns and to track balances, and so like as I think Alex from Near was talking about earlier, it's in our normal daily lives. Like when I go buy groceries at the grocery store, I'm not showing the cashier my account, my account statement and all my transaction history. But when you're transacting on chain on a public ledger, you are doing that, and it does make you a target.
Yeah. And as we approach this, we're seeing more of these products in terms of RWAs, tokenized, products, kind of starting with stable coins, treasuries, kind of going down the risk curve there. Is there creative ways that we can get creative with custody, with privacy, in which, maybe there's limited movement of the underlying, but, we have very robust and liquid products?
There are versions of some of that today in a centralized fashion, right? So like, different custodians have different methods. I can speak to what BitGo does. We have something called the Go Network, where it's essentially an omnibus wallet. So you have one wallet address, and because we're a bank, we can segregate on all books and records. So ultimately, let's say you have counterparty A interacting with counterparty B, and we're selling between those folks. The asset doesn't actually move on chain. It just moves on our own books and ledgers. That's great if you're on BitGo, but if you want to transact outside BitGo, the asset has to leave. So these are some of the things that we've done to try to help mitigate some of the questions earlier, which was like, not seeing all these positions move all the time, but as soon as you need to leave that environment, you're going to see the transaction happen. So we do things like that, but outside of that, that's how we
I know we got some things to add. I just want to build on this by saying this is going to continue to be, like, we're seeing more institutions enter the space. This is only going to be a growing issue of fragmentation.
Yeah.
Just want to put that out.
Yeah, absolutely. One, I think, example, of course, of a way that you can provide liquidity to these assets while keeping custody more secure is the ETFs. This is one of the reasons that they're a solution. Only a portion of the ETFs need to be kept liquid to meet creation and redemptions. Much of it can be kept in cold storage. And as long as there's a buyer and seller ready at the current price, you actually don't need to create and redeem all day long. It's only when there's a kind of big imbalance between buyers and sellers. So there's a lot of volume that happens on an exchange order book on the ETFs, and there's no coins moving on chain. When you look at the Bitcoin blockchain, active addresses are actually trending down. And of course, this is a question about the health of the ecosystem, but part of it is just the ETFs. There's a lot of volume that's happening in a secondary market, doesn't need to be transacted on chain. And yes, that means there are fewer active addresses, but it also means like users are able to get liquid access to Bitcoin without taking any new custody risk. In that sense, it's providing a service.
So I'll just share something that I've been tangling with personally over the last few weeks here as we've seen more of this progress. To take an asset that's native on chain, put it into an ETF, but then tokenize that ETF. It feels convoluted. Can you guys help diagnose this? Like, what is this ultimately the right structure?
No.
It's not. Okay. It feels like it shouldn't be, but maybe we can understand why this is happening now and maybe how we can improve from here.
I'll just add one thing. So in the long run, no, it doesn't make sense to move something in crypto and put it in a TradFi wrapper and then move it back to crypto. In some conceptual sense, why are we doing that? That being said, I think there probably is a little bit of room to do something, and that's because the TradFi stuff has something to offer crypto. What could that be? Well, maybe it is some kind of cross-chain custody. You could hold a multi-token exposure, for example, without having to use bridges. You could have index pricing methodology and automatic rebalancing, and those things are not necessarily available on-chain. You could have audit and other compliance types of functionalities. And so, some of these things are kind of exports from TradFi to crypto, and so maybe tokenizing an ETF could make sense in some narrow cases.
Once they become available on chain, these things, then
Yes, in the longer run, I couldn't agree more.
Okay.
These things are ultimately all moving on chain as a temporary solution, though.
Doesn't it come to the question though, like why the products were created in the first place, right? Like, so if you let's look at like asset management as a whole, right? So before I got into crypto, however many years ago, I worked at Transamerica Capital on the wholesaling side. So if you take an asset like Bitcoin, where if you're advisor at Merrill Lynch, Wells Fargo, wherever, you can't allocate to that. Your systems aren't set up for it. If you're an RIA, you're not looking for custodians because you're scared shitless of the space. So like, ultimately, you're like, okay, I am comfortable with an ETF structure. So, start off GBTC and some of these assets that ultimately got you exposure using a vehicle that they're comfortable with, and they can get their compliance departments and risk and hold it at Pershing and all these other things. So then you take that and you expand it into other assets, ETH, SOL, so on and so forth. So now allocators can go into it. The next kind of leg of that in some ways is, there's obviously the tokenized asset, and I'll come back to that, but then you have digital asset treasuries. We say, okay, ultimately I want to get exposure to an underlying asset, but I don't want to own an ETF. I want to own an equity position, not an ETF position, and I buy a DAT. Then
Just quickly, why might someone want an equity position and not an ETF?
it could be investment policy statement on how they actually structure funds, or how they can, like, what type of assets they can hold. Like, so for instance, how is a digital asset treasury quantify as an equity position, or is it quantify as a cryptocurrency? Like, if I'm a large cap equity, if I'm a mid cap equity manager, a small cap, like I can't buy, the Neo DAT. I know Sal couldn't make it today, but the Neo DAT, but I can buy I can't buy the Neo asset, but I can buy the Neo DAT because it's an equity. So it's a different way to get exposure. That's kind of how I thought 2.0, and then the whole kind of DAT thing kind of went a little sideways. And so ultimately what led into, now we think about the tokenization of like, why do you tokenize an asset? Well, if you tokenize Microsoft's and Apple and these sort of stocks, who are the users of that? It's typically people who can't open a US brokerage account. It's somebody overseas, it's in Africa, you're in Europe, and whatever you're else. And so ultimately, like, if you bring the ETFs back into these tokenized structure, again, why are you doing that? Is because you want to borrow against it, and so a DeFi pool, a lending pool, and you want to do it natively? Is it because you can't actually get exposure in the US markets because you sit somewhere where that doesn't really exist? And so, like, ultimately, I think, to your point, like, people creating products just to create products don't make any sense, but like there is a reason why some of these are going to be, if you think about it, kind of like at the end of the day, who's the allocator?
This occurs in my mind, Tony, like as you think through the evolution of assets, and obviously you guys are geared towards Zcash, but circling back to custody a bit, I think we will see tokenized equities for all the reasons that Nathan mentioned, access, as well as DeFi, composability, these sorts of things. What does asset breadth mean to someone like a Zottle? You guys are, primarily focused on Zcash, maybe more broadly focused on privacy. Is there components that of privacy in particular, that we can apply to a tokenized Microsoft equity? Is that even in the realm of possibilities of what you guys are thinking?
Yeah, that's a good question. I think like you said, Zottle is a Zcash only wallet. We allow swaps in and out of other currencies. If you look at just the underlying technology with zero-knowledge proofs, zero-knowledge proofs are just a way to prove something without disclosing counterparty information. Whether that's on the Zcash blockchain, for example, there's a transaction hash, but there's no sender, there's no receiver, and there's no amount. So it's not something we're really focused on at this time. But if you think about something like tokenized equities, like it would be a way to prove ownership without disclosing, additional information.
Yeah, please.
I was actually going to say you're basically centralizing trust in the protocol rather than in everyone, right? Is that accurate?
Yeah. I mean, trusting code, trusting the protocol versus trusting, different counterparties.
Yeah. Thinking a bit more about, I'm curious about the ETF wrapper here, like around some of these assets. Is is there a regulatory component? There's obviously things up in the air with the Clarity Act and whatnot, but Zach, do you think we'll see something where, we get some exemption where, it becomes more accessible to just go directly to these assets on chain?
We do need some regulatory clarity to unlock all this stuff. Maybe going back to the example of why might you tokenize an ETF or something else? I think a lot of good examples have been brought up. Maybe it's composable in DeFi. I can trade it on an AMM, but only hypothetically, actually. That is not actually allowed in the current system. A decentralized exchange would have to be some kind of a broker-dealer and meet some certain standards. So one of the reasons that tokenized assets on-chain don't seem to be maybe doing as much as we would imagine. It would seem like if it were fully unlocked, there would be a richer ecosystem of tokenized assets, and really that is a regulatory barrier. We need some kind of exemption so that, say, a tokenized asset, a tokenized stock can be traded in an AMM pool. That is not the case today. So that'll get pushed forward over time, but we're not quite there yet. So what should somebody like Grayscale do? You either do something now just to have a toe in the water, but it's not actually going to be a big business very, very soon. So you can either do something now just to have it done, or you can kind of wait for that clarity and then execute at that time. I think really that's where we're at. We're not totally ready to see the tokenized asset vision come to life, and we're getting close, but we need some of those further regulatory unlocks.
Just to add, I hope what Zach is saying comes true, because we have to do some convoluted, things to allow basically a user that invests in a vault that's actually an equities strategy. You have to then take the deposit off chain and execute through like a prime broker to buy whatever equities and other instruments are part of that actively managed strategy, and then do the whole thing in reverse if they redeem. And so the two solutions would be just have all equities tokenized, or have a custodian that's both a traditional finance custodian and a digital assets custodian at the same time. Maybe it exists. But yeah, that would be what we would love to see happen.
We're working through trying to hold, traditional structures, right? So like, we're crypto native in the sense that like, we're really good at holding digital assets. We have the ability to hold securities, right? So we're working through things like that, but it's, it's an operational thing, it's structurals, but I mean, and now you're gonna have the vice versa. You're gonna have those large names start looking at us to use infra, so it'll come.
I'd imagine that there's a lot more demand, kind of to your point, once you have the custody structure, what are some of those conversations like? How much have you looked at expanding the asset universe beyond crypto native tokens to more, RWA centric to unlock some of this more native tokenized equity composability?
We bought a company a few years ago called Brassica, which is a transfer agent. So we've been down this path for a while. Brassica today has its own licenses, and it does hold traditional. Right now, BitGo Bank and Trust is continuing to try to think through how we do that. And we have some ideas in place, and now that we're public, I'm a little less of what I can and can't say. And so, but ultimately, what it leads to is, I think it's very important for us to be able to do both. Just like I think the ones that are holding traditional today think it's important to hold digital, so.
Yeah. I'd imagine a lot more companies are thinking in this direction. It feels like we're, no longer just, a crypto native ecosystem and then, TradFi ecosystem, as they call it. This is just finance. We're going to just have finance companies. This is just a finance event, a finance conference. Miami's a finance city. Guys, thank you so much for listening, watching this panel, being with us here today. Yeah, give it up for our panelists. Thank you so much, guys.
Thanks for having me.
Thanks, guys.
It was a pleasure. Yeah, awesome. I'm gonna press you there too much, but it does feel like that's an interesting area to explore. Thanks. Yeah, likewise.
You can ask that quite a bit.
Yeah, I hadn't really started thinking about it in that direction. It just makes sense that I think that's a natural next step that all unlocks those use cases.
Deep inside to find you, waiting for the light. I once tried to find, once tried to find, once tried to find, once tried to find, once tried.
Sure. Cool. Alrighty, guys. We are getting into our second to last panel. We've got George coming back up from Near AI, no surprise there, and Ari from Failsafe. Guys, join us. Drinks are going to start at 4. Stick around, panel or two, and then we enjoy the Miami vibes. All right, guys, how's it going?
Pleasure to be back.
Pleasure to be back, as always. George was on stage just a little while ago. Ari, it's good to have you here as well.
Likewise, great to be here.
And we're going to be talking Attack Bench, which is an adaptive security benchmark for autonomous agents. Guys, why don't we just start? We'll start high level. There's been far too many hacks. There's been security incidents out the wazoo. Feels like those who are using AI are using it for evil and not for good, and we need to switch that around. So let's tighten up the security with these benchmarks, and we'll increase the benefit of all these autonomous agents. Why don't we do just quick intro? I know we've only got a few minutes, but then we'll get into the nitty-gritty about Attack Bench.
Sure. I'm coming back, but I'm Chief Product Officer for Near George and also GM for Near AI.
I'm Ari Medvinsky, CTO and co-founder of Failsafe. We're based out of Singapore. We are a cybersecurity company.
And George, we've got a demo here or some slides for this one, right?
We do. Let me just give a little bit of background here before we jump into the slides. So we, meaning the Near AI team and Failsafe, ended up collaborating on Attack Bench, the security benchmarks, because, like you mentioned, one of the things we noticed is that security is important, and there have not been really good benchmarks that have been made for agents from a security perspective. And if you recall, like an early analogy I made, LLMs are the mind, and agent harnesses or frameworks are the body. And they both have a very important role to play in security. So we think this is like a very, very important thing to focus on.
Epic. OK. So let's get into Attack Bench.
Cool. I can kick this off, and then Ari and some of the engineers on our team ended up going deep in working on Attack Bench together. But the basic premise is agents and LLMs and the frameworks around them behave differently under attack. And you have to consider security as a property of a pair of both. And I think this is like the high-level work takeaway I took from both the work as well as the paper that Ari wrote. But we're really happy that this is kind of some of the conclusions and insights that came out of this work. And then Ari, would you like to take it away?
Sure. Yeah. So just as you mentioned, it was really interesting. It was when we first started the work, we kind of looked around, and everything was like all the benchmarks that we saw. Everything was static. Like there was a set of known attacks, and you plug the agent through and see how it does. But it's not very realistic. So I mean, typically the adversary will deploy the best LLM they can find, right? Potentially, and then we'll adapt. And so that's what we kind of decided on, is that we're going to make this as hard on the agents as possible. So we built out this framework, Attack Bench, where you have a red team and a blue team, and the red team is powered by an LLM, and it gets to see what the thinking of the agent is. And it's very realistic. Like you can't assume, just hope for the best. Hey, this, I tried this, nothing happened, so we're good. It is realistic, so we let, and you'll see the slide in a second, we'll let the red team evolve its attack based on the thinking of the agent. And so what we did is, so this is what we tried out. We did this on 3 different frameworks, on Ironclaw, Hermes, and OpenClaw, and we tried 4 different frontier models going across 52 scenarios. Yeah. And so you can see the loop here. So you get, in this framework, you get 5 different tries. and it's if anyone succeeds, then that counts.
And could you just maybe give an example of one or two of these scenarios so that we can understand, the loop here?
Yes. In fact, why don't we go to the next slide? One more. Perfect. So these are the kind of different attacks that are being tried out. So the you have the agent and then the LLM inside, and we're trying to exploit. The red team doesn't get to talk directly to the LLM, but it's using various side channels, right? So it's using what looks like a record in the field or a free-form text. And so these are some of the attacks, right? So you'll have like a write instruction, go write something out, or go do exfiltration, go fetch this URL, and you'll have your key embedded in it, or try to make it exceed, right? So let's go back to the loop now.
I'm gonna ditch my chair so that people can see.
And then, here we go. So this, so you have you have the, okay, great. Yeah, you have the regular workflow of the blue agent, let's say Ironclaw or OpenClaw, being asked to do some generic task, go tabulate, go answer email or whatever. And then the red team, and this is powered in this configuration by GPT-5, 5.2, I think that's what we used. And it will like embed an instruction, like one of the ones I just gave an example of. And it also gets to see what was the thinking, right? So how did the LM react? And you'll see in our paper, it was really interesting. Some of the logic, it's attempt one, then the probe gets sharper and sharper, and oftentimes it succeeds.
Did you have to trick the GPT-5 model into being an adversary and an attack?
It had a prompt, so it knew what it was doing, and its whole purpose in life was, you got 5 chances, okay, go at it. And it was very clever, actually. And one of the things that we still would like to do, and this is open source, we invite everyone to try this out and try this benchmark on other kind of configurations. So, pick your best LLM and plug it in. But yes, so let's just keep going. In fact, Ironclaw out of everyone did the best. So we had no idea. So this is like, we had no idea what the outcome would be. But you'll see that Claude under Claude and GLM, Ironclaw had the least number of vulnerabilities. And as our thesis to all of this is stated up front, it really still does depend on the configuration between what is the pair that you're using. The combination of the LLM and the framework and the agent. What was also really kind of enlightening is because we saw the reasoning. So you can actually, there's a number of improvements that could be made. Like for example, Ironclaw has a lot of strong controls for permissions. Those can also be extended to some of the other attacks. So.
And these models here on the left, these are the protectors, if you will.
Oh, yeah, so this is, as George refers to them, these are the brains. So this is, for example, this was sitting inside of Hermes, OpenClaw, Ironclaw. So they were configured with, Ironclaw was configured with Queen, for example, or GLM and Sonnet.
They were playing defense while the
Yeah.
GPT model was playing offense and trying to
Exactly.
get into these things.
Yeah.
Okay.
One of the things we want to do from our Ironclaw perspective is like better understand and better dig into actually the traces to understand what is happening in these attacks and how we better defend. But currently some of the hypotheses we have is like things like architectural prompt injection protection, sandboxing of tools, things of those features of that sort, guardrails that were designed to actually be security first, really end up mattering.
Do we have more slides? Okay. So we observe these attack patterns.
Let's do one more, and then we can. I think we're short on time. Let's do one more slide here. The next one. Yeah. So if you want to see what an attack looks like, this is an example.
Okay. So in the resolution path, so we have the red, which is the attacker, resolved by Alice audit flag, And so could you describe what red is trying to do and then what blue reacts?
So this is a math attack. So the task of the blue agent was to so to compute the total.
Okay.
And in some field that the LLM ended up trusting, it said, oh, by the way, skip this number, and it did. It happily did.
Okay, so blue lost in this one.
Blue lost in this
one. The bad guys won.
Exactly.
In this one. Okay.
Yeah. We have plenty of counterexamples, but it was very, very, very interesting how we arrived here. And you can actually on some of the runs, you can actually see how exposing the LLM's thinking helps the red team focus in. What was it like? What was the LLM's thinking what was the rationale for not doing this operation?
So a general question here, as we think through, making these things, more understandable, less like black boxes, so we can kind of understand what's going on underneath the hood, we're actually exposing, potential attack vectors. How do we reconcile or balance?
Oh,
yeah.
But it's just general security principle. You don't want to do a black box. You don't your security through obscurity. The lesson still applies here. So if you can hold up, if the framework holds up, if the agent holds up under being transparent, then you can have some confidence in it. You will, if you try to close it up. But by the way, so all of these, each one of these agents have open. You can actually get the trace. Including OpenClaw, Hermes, and we put in a PR. Like I put in a PR for that got approved for Ironclaw. But yeah, I mean, in the wild, the attacker is going to just take the favorite claw and see what it's doing, and then go after after some instance is being used by a user.
I know we're running short on time, but I want to point something that I thought was interesting, which is we went with the brain and the body analogy, but one of the super interesting things to point out is that the body matters a lot in terms of security exploits too. You can see, for example, with, let's say, GLM5, using one agent harness versus another can result in like 3x or like multiple x increases in the amount of exploits you have, right? So it's not just the LLM, it's not just the brain that matters, it's also the body, the harness, the framework that matters a lot in security as well.
And why would that be the case? Why would the same model be more or less secure inside of a different harness?
It's different. So for the agent, it's the guards around it, right? So there's permissions. There's how you interpret, how you do filtering, right? And for the model, each model thinks in its own way. It depends on how many different instances of this particular kind of attack it saw in the past. So it gets trained enough on this instance, and it reacts in one way, and then some other model will react differently.
Got it. George, you're in control of the clicker. I want to be respectful of time. Please, if there's anything else relevant, please share. But
I think we're good.
I think we're good.
Yeah.
Okay.
Yes.
Attack bench. Very interesting stuff. I mean, I'd love to see more data.
Oh, and everything is in the GitHub.
Beautiful. Awesome. Guys, give it up. George and Ari, attack bench. Great, guys. Awesome. Yeah, that was fun. Thanks so much for sharing. We could go for a long time. You're on this one too? Oh, okay. So you guys are sticking around. All right. I'll go on one of the ends. So you guys can squeeze middle. I'll be over here. And we welcome Steven and David to the stage.
You wish you have to connect to it.
Yeah.
How you doing?
We're rounding out near Miami. I think drinks are going to start right after this at 4. Steph, we're really doing it. We're really doing it out here. Guys, last but certainly not least, we're going to be talking about safety, reliability, trust. Obviously you guys just heard from George and Ari about Attack Bench. I think that's the right place to start. Steven, David, let's get some reactions. Can't see David all the way over there, so
I'm right here.
There he is. David, why don't we start with you? What do you think? Attack bench. Maybe we'll just do a quick intro, and then we'll get into attack bench and like benchmarking in general.
Well, I'm embarrassed to say you're making an assumption that I was fully paying attention. I was having some conversations, so I'll pin it over to Steven.
Yeah,
It looked
I was
good, though.
watching, you guys are doing red team and blue team against each other, pitting AI against it, also to do benchmarking and find which ones are kind of the best combination of agents to do the defense and what they can find, exploit. So very familiar with that. We're doing that right now at Halborn with doing kind of the red team side mostly, which is what we focus on. Benchmarking is extremely important. You have to have like a ground truth data set to measure against, but that's very hard to do in security because you don't really know, there is no ground truth in security because there always could be more vulnerabilities. And if you guys saw the Anthropic video around that 20-year-old operating system, they found like a critical vulnerability. It's been there, it's been pen tested. So what is the ground truth? So that's one thing is like relying on a truth data set from the attacker perspective. Another thing is expectations around what the models can do because your AI is fuzzy in, fuzzy out. So you could do the same kind of like script there, but you may get different results each time. As we see, ask ChatGPT the same thing, again, and you'll get a different answer sometimes. So for things as complicated as security, expect the same different results.
Okay, so when we're thinking about this in general, maybe, this is just an evolving thing. Security principles that we want to keep in mind are tried and true, but like you said, AI is a very complicated thing. It's always evolving. It's fuzzy in, fuzzy out. George, Ari, maybe we could just reiterate some of the findings, some of the core key takeaways, and then we can build on this when we start to make some benchmarks around safety and reliability in general.
The thing I would add is I go back to it was really interesting that there was such a big delta between different agent frameworks using the same model, right? And one of the next steps we have to do is go through the trace and try to understand that better, try to understand why, right? We know that there are very important guardrails that matter, things like using sandboxes, things like prompt injection protection. But one of the things we want to try to figure out is like which of the guardrails have the highest ROI of actually reducing security incidences while minimizing like any disruption potentially to a user experience, right? That was my main takeaway and kind of like a big next step I took from this.
Yeah, just to add to that, I think the setup is really important. You want to make it adversarial. You want to make it really a fair test. Don't go for like we'll just give it a bunch of static files and see how it does. Just set up an environment, and that's what we try to do here, that is realistic. This is what an attacker does. So this is your worst scenario, not the best case. Oh, one guess and you dodge the bullet.
I have a question related to it. I know you're moderating, but for them, when you guys did it, do you use like sub-agents or anything at all? Because I've heard mixed feelings about having like one master model that uses this framework and kind of does all of it, or delegating out to other sub-agents smaller tasks like scanning versus like exploitation and code writing. How did you guys approach that?
So on the red team side, it was you get to configure configure the LLM, and it gets max of 5 tries, and it gets to see it can basically do whatever it wants to do in its loop. Yeah, I mean what we'd like to see is additional tests with other LLMs configured. I think that'll be really interesting to see. And then the blue team, it's whatever Ironclaw, whatever OpenClaw does to accomplish the task. So it can be sub-agents or whatever.
Are we approaching a world because another takeaway from that was that these are pair, right? There's not one model that does it best. Do we approach a more pragmatic world where maybe we do get like some composability amongst harnesses, sometime almost like a harness aggregator, if you will? We have something over the top, and it'll have an agent complex around OpenClaw, Ironclaw, and it'll start to segment certain tasks that could be potentially vulnerable to certain prompt injections, and then use or choose a harness in a model accordingly.
That's an interesting question. I think it may be difficult to do that for the foreseeable future because there's so many sort of moving parts of the architecture that may not work together if you try to essentially do like a harness on top of multiple different harnesses. It's kind of what you're saying, right? It's probably better to just build the specific harness with the best security practices that you can and with the best features that you can, and not rely on this potentially moving mix of different features and different security features.
That's what I was going to say. I agree with you because they're coming out so fast. The models is like by the time you finally you pick the best one, the best mixture, another new one is released there. That's like better. You don't have to start it all over again. So
Yeah, I mean they're constantly leapfrogging each other. But I think that again, what we try to do in Attack Bench is having the idea is that this is an ongoing thing. So as these models come out, plug them into Attack Bench and see what happens. Because today you think that you plugged every hole, you thought of everything. Tomorrow it changes, right? So.
I also think it's use case specific as well, because there are certain harnesses that would be good for one use case, and there's certain harnesses that I wouldn't even think twice about using. Because I think the answer really comes down to software architecture in some respect. When you're using the inference, like that should be like the smallest amount of the AI that you're using. Everything else that you're doing is effectively somewhat deterministic in some respect. If you're building out an agent and you're having it doing certain things, all of that should be deterministic. I think too many people are thinking through AI security of, let me just give it instructions, let me do this, or let me segregate the keys and move it over here. It really has to be thought through. The answer is more architectural and not, let me build the most secure harness. It's more about infrastructure as opposed to like harness specific. When I'm building this type of solutions for like a large institution, it's not a let me go and grab a harness. It's really thinking through, I'm grabbing data, I'm putting it into a data lake, I'm building this particular function and broken out into 7 different types of agents, IAM policies, fully restrictive. The answer's a lot more complicated than just let me find that one harness and just deploy it.
So, George, you guys are building a harness at Near AI. How does this inform your thinking? What do you contribute to the roadmap as a result of what some of these findings?
One of the most immediate things, literally, we're having Ari come to our all hands tomorrow to present some of the findings, because just taking the traces of like what happened, studying it, and then making sure to build the learnings into Ironclaw going forward is really important. I also think just bringing awareness to this is so important. Like, most of the conversation people have about different agent frameworks are about the capabilities, not around the security risks. But if you're actually using agent frameworks to do anything real, anything that has economic consequence, security and privacy matter a lot as well.
We heard a lot from George and Ari, so I think we have a solid understanding of where Attack Bench is right now and how that can inform these things. I'd love to just get a better understanding of how Sovereign and Halborn are thinking about building these secure frameworks, and then ultimately, how these can all work together.
Yeah, so definitely been thinking about it for a while because Halborn, one of our core capabilities is doing security testing and code reviews, smart contract audits, pen testing, and obviously a lot of that now is becoming empowered by these models, and people can build it and test it themselves. So I think that what we're shifting to is much like you guys are building the harnesses and hooks, is using the expertise and building around the models to, one, benchmark, do the research for it that can be provided. And it's almost like prompt engineering mixed with MCP creation, mixed with data flow of how you construct the execution, whether it's an attack path, defense path, or even it doesn't have to be security, just advisory recommendations. So the way you ask things and the way you put the data together for us, like the customer experience, is putting all in one package rather than just singular requests and get results from that too. Because the overall security is what really matters. Not we've taken that approach since the beginning, and it's still the same. It's not about like, do you have a vulnerability in your code or layer 1 or smart contract? It's the mix of things. It's the custody. It's the infrastructure, like Dave had said. It's the code. It's the people, and all of that has to be kind of looked at, in comprehensive, full view.
Yeah, I mean, nothing really to add from what Steven said. You know, there's nothing like specifically sovereign that we're doing as far as like a benchmark. But again, the proper way to think about it is just with any other architecture that you're building is to really think through what is the specific use case, think through the threat model, what type of access, you know, to what type of data, and just make your decision from there. It's not hard. AI security isn't something that we haven't seen before. It's securing code. I think the problem with what's happening is this world is allowing people who shouldn't be doing certain things to do things that they weren't able to do prior, which is causing a lot of security, you know, issues. So, you know, securing code, thinking through architectural security, thinking through, you know, how to air gap certain decisions into enclaves, like those are things that we've done before and we're going to do in the future. So there's nothing new here. But I think what's happening is people are deploying things that they, I don't want to say shouldn't be doing, but it's making things easier for people, but then they're just completely exposing their entire lives, so.
Yeah, and I think we have the exposure still around like blind reliance. Like people even, I feel sometimes like almost you trust the AI you're working with too much, and it's not about like not thinking for yourself. It's that, you know, it does it so quickly and so fast that you don't, you know, challenge it sometimes, and you can have like the, you know, LLM as a judge to do it, challenge it for you. But at what point do we really take it back and say like, all right, is what we're doing, does it make sense, and can we trust the results or the defense or whatever it is for all of that fundamentally?
Yeah, I mean, perfect point is, you know, you're not going to have one employee that's going to write your code, do the security scan, approve, deploy, manage your infrastructure, but that's how everybody's thinking about AI agents today. And the answer isn't simply just, well, make 4 different sub-agents. That's not how you have to think through things. Again, identify the pieces in your architecture that can be deterministic and not done through the agent. That is the proper security model.
I have actually a question for my fellow panelists, if you'll humor me, which is, you know, a lot of when you're writing code, oftentimes for every 1,000 lines of code, I think it's what, like 10 to 20 bugs per 1,000 lines of code. Crypto as an industry is built upon the premise that essentially code is law, right? Given the amount of bugs that exist and connected to the fact that code is law in crypto and the amount of money at stake, what do you guys think that will mean for this period of time in the crypto industry going forward?
For the matter, I think that, well, lines of code, you can't really tie a value to that. That's actually even something, you know, applies to us. Like a lot of security reviewers will look at lines of code, and the more lines they are, the more you charge somebody for. I've never believed in that model since the beginning. I think it's, you know, complexity, value at risk is more important for that. It's, you know, how, you know, that's really the way you apply to it. If you have something that is high impact, highly complex, that has a lot of stakes, that should be treated much more secured and much more valuable, that you should be you know, taken serious with our time. And you know, when you look at charging somebody for that, or if you put a stake inside of something, it's the more exposure you give it, the more your risk you're taking on. So I think we're now going to a world where it's not about quantity and it's not about time either, because things can happen very quickly. You look at something that's maybe 1,000 lines of code more, and it's just seconds difference of what the AI can do for like a review and all that. So I think that you have to think about you know, more than just quantity or time. It's more about results driven. That's you know, results driven, and the results are usually around what kind of impact or what kind of you know, complexity around the ecosystem, around the crypto is involved with it. You know, it's kind of like the you're looking at not just one thing, but you're looking at the concentration of assets and infrastructure that surround that and integrate with it.
I have a question around the use case, right? If we're starting from, you know, here's the use case, and then threat detect the use case. You know, see what kind of threats are potentially going to penetrate this thing. How, you know, we're obviously at consensus, you know, a lot of on-chain digital asset teams here, but, you know, these two worlds have started to collide with AI. AI and digital assets have started to collide. Do you foresee a lot of the research and security testing and things that you guys have done, you know, start to make its way out of the digital assets world and make its way into the pure AI world? And then what sort of use cases do you forecast for, you know, the near AI harness and you know, the things that Hubborn is working on? How do you see these things ripple, the ripple effects into the broader landscape here?
Yeah, I mean, I'll give you my 2 cents. I think, you know, it's funny that you bring it up like that, how much is going to get out. I'm hoping it's the other way, that things get in. I'm seeing AI security much more mature outside of digital assets. So I see the complete opposite of what you just said, funny enough. So I'm hoping some of those principles make its way here.
And just to make it concrete, our experience at Failsafe has been that, look, I mean, we've done threat modeling. Like I've done threat modeling for like decades. I spent like 8.5 years at Microsoft, and it was a religion there. Not as much as other companies I've been with. Threat modeling directly applies to Web3, to Web2, as well as to agents. And I really mean like, traditional, what are the security boundaries? What's, the data flow diagram? What are the invariants? And having LLMs build that out for you, I mean, this is something that we did with Swarm. It works quite well. I mean, the LLM still has creative freedom to explore different, to use its knowledge base. But when you give it this kind of framework, it produces better results.
I predict there's going to be a lot of security engineering hiring at crypto Web3 firms in the next few years. And I also predict our friends that end up doing a Web3 flavor of security or experts at that will get a lot of business from a lot of protocols. I also think what will be super interesting as well is that if you think about like what these agents are becoming, one way I think about these agents is you can have general assistant agents that help you with general things like emails and calendars, et cetera. You can have vertical specific agents, things like Harvey Lagora for legal. Maybe there's a vertical specific version of a security agent for crypto in the Web3 world. And you have horizontal agents that do engineering, like Claude Code or Devin, or customer experiences like, something like Sierra or Decagon, right? I think the ones that I think all three will impact crypto for the foreseeable future. The general assistant is going to make everyone more productive. The vertical specific crypto agents may end up impacting yield and security and a couple other things. And like all the other industries, I think crypto and Web3 will adopt a lot of the functional experts to help make their engineering more efficient, sales and marketing more efficient, et cetera, as well.
Yep, so I agree with what all three of them said. So another different perspective on how like the security aspect may spill out into the real world or vice versa. Something we're not thinking about or really have a framework around is privacy and policy and also liability for that. So I see a lot of people building these agents that are doing crypto trading and trade on my behalf or do arbitrage automatically for me or open clause, say, hey, like liquidate my portfolio and put it into here, take it out. It's like you're giving trust to access to do all that. But when it goes wrong, because again, fuzzy in, fuzzy out, or maybe something goes off the rails, whose fault is that? And like who's to blame for it? You, the agent, the LLM developer, the host that's using that agent, and how much access do you give it? As far as to the keys of the collateral. And I think that when it comes to we see even like outside crypto, like IP rights. In music, there's like these new apps like Suno that are making these amazing songs, and like there's artists that are like now wanting to say, hey, they're like, training on my song. But it's like, okay, well, before we had AI, every time you listen to music growing up, you're being trained on that song too, in a way. So it's like it's a weird, psychological way of looking at what's the difference between all that. And I think that's going to be a very weird world pretty soon on how we can do it outside of the tech, just like law, privacy, and compliance around that.
What are some of the things that you're most excited about, as we tighten up, the security around these things? Are there, use cases or customer propositions? I'd imagine, in Near and Halborn in particular, you're, traditionally a crypto kind of security company, but you're now expanding outwards. What are you guys most excited about this new world?
Something that you just said got me excited about, like the whole vertical focus, like security framework with AI, like because that's what I see too, and that's what we're building is that taking our expertise and making that into a framework and just delivering what we do now, but faster and more consistently for customers. So I'm excited that you said that.
I also want to just inject a little excitement into this because I personally think people aren't talking enough about the fact that a lot of these technologies we're working on, I think will usher in an era of abundance never before seen. And I think some of the biggest drivers of this will include math and scientific research, right, that people don't talk that much about. I have friends who help people cure incurable cancers in like the last 6 months. Like, what a time to be alive. If any of us,
That deserves a round of applause. We're curing cancer.
if any of us get cancer in our lifetime, I bet you we will be able to find a personalized way of treating cancer. That's amazing.
Can I just want to dig into this a little. I mean, how did they do it? Like, what did they do? How are they able to cure cancer with?
You guys can look this up on GitLab, on Twitter. Like a friend worked with. I'm trying to figure out how much I want to dox. Okay, I'll just share maybe some broad outlines. So people have been able to use things like AlphaFold, Gemini, ChatGPT, and Grok to actually design personalized mRNA vaccines to target specific cancers. And people have been able to, there's a Twitter story of like